Hey guys, what's up? Welcome back to another video. In this video, I'm going to talk about a company that recently announced earnings for their full fiscal 2023 year, and that stock is Oracle. And we can see that over the last 12 months, Oracle is completely dominating the market. They're up 70%, while the rest of the market is only up 16%. So in this video, I'm just going to look into some of the recent news that came out surrounding Oracle. I'm going to look at their financial statements, and then I'm going to figure out the intrinsic value per share for their company. So right here in this article, they touch on a couple of key points as to why Oracle is doing so well over the last 12 months. For starters, right now they're having one of the best stock performing years since 1999, and they're outperforming pretty much all large cap enterprise tech stocks except for Nvidia. And then also, the case for investing into the cloud for Oracle has finally come through, and founder Larry Ellison is really trying to make Oracle more competitive in that regard right now. In the first paragraph, they touch on the fact that historically Oracle has lagged behind tech rivals in building cloud technology. But right now, the stock is up 73% over the last 12 months. They're outperforming all large cap enterprise tech stocks except for Nvidia. Shares are up over 50% year to date in 2023, which is one of the best years that they've had since the dot-com boom in 1999. Right now, or historically, they touch on the fact that they've lost market share in the cloud market to Salesforce, and they were also a small player in infrastructure as a service, where Amazon, Microsoft, and Google have typically been leading the way. But thanks to the craze that's surrounding generative AI at the moment in the economy, Oracle is seeing some pretty accelerated growth. In 2023, they touch on that Oracle had a lower market capitalization than Salesforce, but now it's not even close. Oracle has surpassed Salesforce. They have a $330 billion market cap, while Salesforce only has a $204 billion market cap. Not only is their stock price increasing more than Salesforce, but their company is too. Their financial statements, their revenue year over year from the latest quarter increased 17% compared to only 11% for Salesforce. So they're doing pretty well against their competitors. The AI craze is something that they're really benefiting from. Historically, they haven't really been that competitive and that innovative in tech industries, but now they're really trying to change that. And so right here, these are their financial statements. I'm going to look at their balance sheet, income statement, and cash flow statement. For their balance sheet, we can see total assets for the year up from $109 billion to $134 billion. And we can see that at the moment, they are operating at mainly just financing their business off of debt. They have about $1.5 billion of equity and almost a little over $130 billion of liabilities, but they do have an accumulated deficit here, which is decreasing year over year from $31 billion to $27 billion. For their income statement, we can see that total revenue is up from $42 billion to $49.9 billion. So that's an increase of around 18% year over year. And we can see, if I scroll down here, that net income is up from $6.7 billion to $8.5 billion. So that's an increase of about 27% year over year. Obviously, they had some pretty impressive growth in 2021. That's why their earnings were sitting at $13.7 billion. But since then, with companies going back into office and moving away from remote work, a lot of tech companies that really benefited from that digital craze started to calm down. But we can see that Oracle's earnings are back on the uptick here. And then lastly, this is their cash flow statement. We can see that operating cash flow year over year is up from $9.5 billion to $17.1 billion. So that's an increase of around 80% year over year. And then we can see in their financing activities, there's some interesting activity happening here. For purchases of common stock, we can see it's down from $20 billion, $16 billion to $1.3 billion. But we can see that the repayments of senior notes and other borrowings increased from $2.6 billion to $8.2 billion to $21 billion. So it seems like over the past 3 years, they've been prioritizing returning value back to shareholders less and less by repurchasing common stock, and they've been focusing primarily on paying dividends to shareholders, as we can see right here at $3.6 billion, and then also in paying down their liabilities and their debt, trying to reduce their liabilities on their balance sheet. So right here, this is a discounted cash flow model to figure out the intrinsic value per share for Oracle. Yahoo Finance is estimating that the company is going to grow at around 11% for the next 5 years. They had around $8 billion of free cash flow in their most recent full year, an $85 billion net debt position, and 2.7 billion shares outstanding. That means that their intrinsic value per share right now is set to be around $19 per share, which means that at the current share price, they're definitely not trading below intrinsic value per share based on these estimates from Yahoo Finance. Then on the right hand side here, I did a competitor analysis comparing them to two of their competitors, IBM and Microsoft. We can see that in terms of profit margin, Oracle is pretty competitive. They're around middle of the pack between IBM and Microsoft. And then for PE ratio, they're trading at 37 times earnings right now, which seems about on par with their competitors. IBM is the exception. They're trading at 67 times earnings. And then we can see in terms of dividend yield, they're also middle of the pack at $1.28 for every $100 that you invest into Oracle, compared to IBM's $4.68 and Microsoft's 97 cents. So in terms of comparing them to their competitors, it looks like Oracle is basically middle of the pack. They're above IBM, but not doing as well as Microsoft. And then lastly, to end off the video, I wanted to compare Oracle to the other companies we've looked at in past videos so far. So far on our intrinsic value table, Google, Alibaba, General Electric, and Etsy are the only companies that were trading below intrinsic value per share. But Oracle did not make it onto that list because they had a $19 estimated intrinsic value per share, and they're currently trading at over $100 per share, so that's not good enough to get them onto the table. We can see right here in terms of growth rate, Oracle had an 11% growth rate, so it's not good enough to get them onto the table. Nvidia, which is the only large cap enterprise tech stock that's outperforming Oracle on the stock chart, they're sitting at the #1 spot with an estimated 33% growth rate. In terms of profitability, Oracle had a 65% gross profit margin and about a 17% net profit margin. So it was good enough to get them onto the gross profit table at 7th place from all the companies we've looked at, but not good enough to get them onto the net profit table. In terms of dividend yield, we can see they come in 3rd place compared to some of the past companies we've looked at. Kroger is sitting at #1 in dividend yield so far. And then in terms of revenue growth for the 2nd quarter of the year, which is the 4th quarter of Oracle's fiscal year, we can see they've had the highest revenue growth year over year so far at 17% compared to the other companies on that list. But in terms of net income growth for the 4th quarter, it was only at around 4%, even though, as we saw earlier, for the full year, their net income growth was around 27%. For only the 4th quarter, it was only about 4%. And then lastly, we can see right here in terms of stock performance over the last 5 years, Oracle does make it onto the table, coming in at 9th place. They're up around 160% or 146% around for the last 5 years. And so at the time of making the video, which I put this chart together about 3 days ago, yesterday, something like that, they were up around 158%, so I'll leave it at that. Tesla has the #1 spot at around 1,000% over the last 5 years. So based on this, comparing them to the other companies, it looks like Oracle is doing pretty good. They're very competitive in terms of return to their shareholders. In terms of profitability, they're not that competitive. Microsoft is obviously doing the best at 36%. Year-over-year growth is pretty competitive as well, especially with revenue growth, but they're currently not trading below intrinsic value per share. In their industry, between IBM and Microsoft, they're about middle of the pack. So I'm not too sure what to think of Oracle right now. Their stock performance has been doing really well just recently, but historically it's been decent and hasn't really been that impressive compared to other tech stocks. Let me know in the comment section down below what you guys think of Oracle. Leave a like on the video, subscribe to the channel, and I'll see everyone in the next one.